Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So some economic data out over the past several weeks, and it's not great on some fronts, especially with regard to leading economic indicators. We've seen employment be very resilient, but the LEI Index lower for the 14th consecutive month. New York Fed's probability of recession indicator above 70% for the first time since the 1980s. Let's unpack the drivers behind that. And finally, it's not all gloom and doom. International equities relative to US from a valuation perspective are still very attractive. So the LEA Conference Board's leading economic index is lower for the 14th consecutive month. In fact, it declined by 0.7% in May. That index moved lower. It has 10 different indicators, one of them being business conditions, mostly around consumer expectations. We've also seen new orders slow and worsening credit conditions, a lot of it related to lingering inflation and the fact that interest rates have moved from near 0% all the way up north of 5%. You're going to put some strain on the economy, and often historically it's been somewhat of a lagged impact, and that's what we're starting to perhaps see or expect to see over the next 12 months. Now, the New York Fed's indicator agrees, and it's looking at pretty narrow in focus if you look at the spread between the 3-month Treasury yield and the 10-year US Treasury yield. 3-month well above the 10-year. The economy market is expecting rates to eventually move lower because of a slowdown. Fed's indicator says that data is saying 70% recession. We haven't seen that since the 1980s. That was the last time we saw inflation like this period as well. If you remember, we're well off that high of 9% down to 4%, inflation moving the right direction. The Fed most concerned about moving 4% down to 2%. Second stage of the inflation fight going to be much more difficult for Powell and the Federal Reserve Committee meeting members. International equity valuations. On the chart here, we have in the orange MSCI EFE. That's the developed international ex-US, right? Think Western Europe, Japan, developed international companies outside the US. Price to earnings ratio, the multiple that the stock market is trading relative to the earnings of the companies. Okay, both of them are relatively neutral to above average, but if you take a look at the comparison to the S&P 500 in the orange, the difference between those, that is what that green chart, the area chart down at the bottom is showing. You can see that difference. That's the highest that we've seen since the financial crisis of at least 15 years. And remain attractive. You can see that reached an extreme back in the early part of 2022, still remains favorable relative to their earnings. International equities are priced much more attractively relative to the US. And finally, congratulations to two pilots. A pair of aviators decided to try to fly and break a record to visit the 48 lower states within the United States in as fast of amount of time as possible. They did it in 38 hours, 13 minutes. There was another group that tried to do it that finished in 44 hours. They said the shortest stop between states, happened a couple times, was about 4 minutes. So they were in a hurry. They got it done. They said it was a bucket list item. And so they did it really quickly, obviously in a short amount of time. Congratulations to them. Obviously didn't get to see a lot of sites, but I think for the getting your name in the world record, they did it. So congrats. With that, I want to thank everyone for watching, and I'll see you next time.